Let's speak about Chargepoint and their Q4 earnings call. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be taking a look at some of the most important parts of this earnings call. Now, what a crazy day it has been for Chargepoint. You'll see that they were down all the way as low as 9.25. From the peaks there, if we go all the way down there, you can see that was 18.8%. Okay, as of right now, they're down about 2.18%. Now, it's a good day for EV, so this is a fairly poor result, quite obviously, but it's nowhere near that 18%. When I saw the news come out and I saw Chargepoint, I believe it dropped 15% like straight away in the after hours. I personally thought it was ridiculous when you actually read through the earnings call, when you see the numbers, when you see what they've done. Yes, there were some revisions made that people aren't going to be happy with, but there was a lot of positivity. Also, when it came to the Q&A section, there was a lot of good answers given to a lot of interesting questions. So that's what we're going to speak about in today's video. Obviously, Chargepoint is one that we follow very closely on this channel. It's a company that I love. It's a company that I believe in the long term. I do think that, at the end of next year, they can hopefully start turning their profit. But we're going to have to wait and see. So right before we get into speaking about everything that happened, could I please ask you to hit that juicy like button? I really would appreciate it. Helps me out an awful lot. Subscribe if you're new around here and end up enjoying the content and you want more. And also, if you are interested in getting some free shares, sign up to Webull, deposit $100. You literally get some free money. What's not to love? But anyway, let's speak about Chargepoint. So the little presentation they let out, it's very basic, so we're going to spend most of our time going through the actual earnings call. But we can see non-GAAP operating expenses here as a percentage of revenue at 53%. Go back up for 2 seconds. Revenue diversity stayed much the same, but there was some nice thresholds crossed here, some really solid numbers. You can still see North America, the bigger market by far, but Europe is definitely catching up as we go on. And then non-GAAP gross margin up at 23%. So, if this is all you go and look at, it doesn't look bad whatsoever. Now, before I get into a bit of retrospective on the full year and what the road ahead holds for us, we'll review the fourth quarter results. So our fourth quarter grew 93% year on year. I don't care who you are, what company you are, 93% growth is a very, very good. And 22% sequentially, making another record quarterly revenue level for the company, while improving non-GAAP margins by 3 points to 23%. I mean, that's all great. Delivering on our expectations set in our last call that we would sequentially improve gross margin. On the same call, they raised the midpoint of our full year guidance by $5 million. The revenue results for the full year were slightly below the original guidance midpoint at 2.5%. So this is one thing obviously that we're a little bit upset about. Below the revised guidance midpoint. Fourth quarter revenue results were below the guidance range and 7% short of the midpoint. So this is, the bad essentially. And it's nothing absolutely insane. It's nothing that warrants a 15 to 18% downward move. And that's why so many shares were bought back up very, very quickly today. This was due to a combination of special circumstances. The first is a decrease in North American commercial demand during the month of December. And the second, while overall supply chain limitations have eased, they persist for certain hardware products. We'll expand on this later when we get to the Q&A section. And lastly, we just missed shipment cutoffs for some customers that caused a larger gap between billings and revenue than historical norms. Now again, this was spoke about in the Q&A section briefly, but that revenue still exists. It just doesn't show in this particular earnings report. And if those shipments had been able to come through, if they were able to be done on time, then they would have more than likely hit guidance. So I mean, if you don't just read the headlines, if you read what's actually happening, it does not paint a bad picture whatsoever. To put in perspective, the full year revenue was $468 million. The business grew 94% this year versus last and over 90% year on year each quarter. We managed operating expenses through the year to achieve the improving operating leverage you see, and this is foundational to becoming cash flow positive in calendar 2024. I do believe it's more so towards the very end of 2024, but I might be mistaken. We are exceptionally proud of crossing through an annualized subscription revenue benchmark of $100 million. So that is what we see here. And that is awesome. That's a great number. It's a clean round 100 million recurring revenue. Happy days. We also demonstrated growth in fleet as a major vertical globally in our European business across all verticals. Both of these outpaced the 94% growth rate of the company to gain ground as a percentage of overall income. So, I mean, really, guys, would you read that and think that they should be down 15 to 18%? No, you wouldn't. You would be very, very, very silly to think that. Yes, some guidance was missed. There is a clear reason for it. And again, that revenue is just going to be seen in the next quarterly report. Now, moving on to results, fourth quarter revenue was strong at $153 million. So for ChargePoint, that's solid revenue, up 93% year on year and 22% sequentially, but below previously announced guidance range of 160 to 170. So again, missing guidance by, midpoint is what, $12 million. It is what it is. It's obviously not what you want to see, but even the video I made yesterday or the day before about ChargePoint and looking towards these earnings, we can expect things like this from ChargePoint as a company. As long as we're not getting decimated, they're at that stage. They're a growth stock. The shortfall was principally due to supply issues with our DC product lines, as availability was better, but still not sufficient to hit the ramp. Network charging systems at 122 million was 80% the fourth quarter revenue. So still, network charging systems are the large majority of ChargePoint revenue, 80% and up 109% year on year and 25% sequentially. Now, subscription revenue at 26 million, which is 17% of total revenue and in line with third quarter percentage contribution, up 50% year over year and 19% sequentially. Awesome. I mean, fantastic. Further, our deferred revenue from subscriptions, representing future recurring revenue from existing customer commits and payouts, continue to grow nicely, finishing this quarter at $199 million, up from $175 million at the end of the third quarter. Again, that's solid. That is good. Other revenue was 5 million and 3% of total revenue. So yeah, it doesn't mean too much to us. But I mean, all in all, what's wrong with that? Non-GAAP gross margin was 23%, up from the third quarter at 20%. And we were particularly pleased with this progress as cost reductions, higher ASPs, and incrementally lower supply chain headwinds more than offset certain product transition costs. Specifically, we saw a 4-point drag from supply chain impact during the quarter. Non-GAAP OpEx for the fourth quarter were $81 million, a year-on-year increase of 5% and sequential increase of 2%. So again, happy days. So to maintain our path to profitability, we responded to fiscal 2023 gross margin shortfalls by spending $35 million less in non-GAAP operating expenses relative to our original annual guidance and essentially kept quarterly non-GAAP OpEx flat each quarter of the year. Again, they're handling the issues that are being thrown at them. For the first quarter of the year, okay, so let's speak about some more guidance. We expect revenue to be $122 million to $132 million, a year-over-year increase of 56% at the midpoint. Now, this is one that people were more upset about than most because this has come down considerably than what was expected. It was expected to be closer to the 90s to 100s. This was the worst piece of news, essentially. But look, it's still great growth. If you do listen to the earnings call, especially at the Q&A section, he speaks about why this is going to happen a lot. Q1 generally is lagging for them in comparison to other quarters. So it is what it is. We have to take it on the chin. It's part of investing in growth stocks. We expect continued sequential improvement in gross margin this year as supply chain challenges continue to ease, our cost down efforts continue, and we get the benefit of volume on newer products. Regarding OpEx, we expect leverage to be lower in the first quarter on lower revenue, but then to improve through the balance of the year and for the year. Again, that's fine. We're being painted a clear picture here. They're not trying to sugarcoat everything, not trying to lie to us. They're telling us the roadmap. Advances in these metrics are key to our commitments to turning cash flow positive in the fourth quarter of 2024. There we go. That is the majority of it. Like, really, that's all absolutely fine, is it not? Now, again, there's a lot to the Q&A here. I'm not going to speak about absolutely all of it, okay? So we're just going to start off with this question here. Just to clarify the revenue shortfall versus your guidance for the quarter. If those shipments had gone out on time, would you still have been within or even above your guidance range? Because it's not really revenue, you're not going to get it because it comes just at a different time. At the end of the quarter, the semi-trucks were sort of blended up around the block, so we fundamentally just had a back-end linearity issue of getting products either built from a DC standpoint because you ran out of gas on that from a supply chain standpoint, and then on the trucks in time at the end of the quarter. The short answer is yes, they would have hit guidance, as I said earlier in the video. Who cares that there was this? This is part of business right now. It's part of the climate we live in. It's happening everywhere. So yeah, absolutely fine. The liquidity position improved a few million of $400 million in cash and short-term investments. You mentioned the 50 million ATM offering. Could you speak to the driver behind the utilization of that in December, given you already had a pretty strong liquidity position before that? And they most certainly do. The bottom line is we need to maintain a strong balance sheet, and relative, I think we have the best in the industry and we need to stay there. Now, I don't think that statement is true by any means, but it is a strong balance sheet. The bottom line is, would we use it again? It's opportunistic. It's based on price and circumstances and timing and everything else, So we're just going to keep an eye on it. And I mean, that's the perfect answer, is the answer you expect. When you're looking at a company like Chargepoint, you expect these things to happen every now and again, even if they are in a relatively strong cash position. I'm very happy with that answer. Now, obviously, there's a lot more questions there, guys. Do go read through a lot of them. A lot of them were actually, you know, answered in the earnings call. There was no need for a lot of the questions, but that's what's going on. Look, it's obviously not the best reaction. They are now trading below this area of resistance. Even on a fairly good day for EV right now, you can see a lot of the stocks are up. So obviously not ideal. It could honestly lead to a little bit of a downtrend over the next few days, just because, again, that resistance has been broken. And also, it's a Friday. We could see a bit more of a sell-off. We're going to have to wait and see. I'm very, very glad to see this very prompt recovery, though. I think it was extremely unwarranted to go down that much that quick. But anyway, my friends, if you watch this video all the way till the end, you have a true legend, and I really do appreciate you being here from the bottom of my heart. Your support means the world to me. Could I please ask you to hit that juicy like button, subscribe for more content, and again, if you want that free money, those free stocks, you can sign up, deposit $100, get all of the free stocks, sell them, put it into Chargepoint or any other company you want. It's that easy. Anyway, guys, I hope you have a beautiful, blessed day. I'll see you in another video very soon. Peace.